Welcome to this short explanation of accruals and prepayments. In financial accounting, we try to match the expenses of a period to the revenue of the same period. We'll illustrate this with an example. Imagine a decorator whose clients provide their own materials, and his only expense is a lease payment on his electric van, which he pays once a year in advance. His clients pay him £30,000 a year. Here are the payments he makes for the van lease. Have a look at the payments and see how much profit you think he makes in year 2. If your answer is £28,000, you have matched the year 2 expense, £2,000, to the year 2 revenue, £30,000, even though the payment was actually made in year 1. This payment in year 1 is known as a prepaid expense. Now consider the accounting equation. If you're not familiar with this, follow the link at the end of the slides. The accounting equation tells us that the assets of a business are equal to the liabilities plus the equity, which is the money owed to the owner or shareholders. The equity would be the equity at the start of a period plus any profit that has been added during the period. The first payment in year 1 reduces the asset of cash by £2,000, but it is also an expense of year 1. This reduces the profit, so the equation remains true. The second payment in year 1 also reduces the asset of cash by £2,000, but it is not an expense of year 1. Therefore, it is replaced by another £2,000 asset called prepaid expense. This is an asset because the business is entitled to receive a year's use of the van. The second example is the same decorator, but now he pays for his van lease in arrears at the end of the year. Here are the payments he's made. Imagine it is 5 p.m. on the 31st of December in year 2, and you are calculating the year 2 profit. You know that the year 2 lease payment will have to be made fairly soon. How much profit did he make in year 2? If your answer is the same as before, you have matched the year 2 expense to the year 2 revenue, even though the payment will actually be made in year 3. You have also assumed that the year 2 lease costs £2,000. This estimated expense is known as an accrued expense. Going back to the accounting equation, you have created a £2,000 expense, so we need another £2,000 somewhere in the equation to maintain its integrity. The business owes £2,000 to the leasing company, so this is shown as a liability called the accrued expense. And that pretty much covers accruals and prepayments. The time periods we've used in this example were a year to keep it simple. In reality, there'd be shorter periods, a month or possibly a quarter. For more information about any of this, please follow the link on the next slide. Thank you.